Welcome, guys, to the watch list for the week of February 21st. It's been 5 months, and market has simply been sideways after an epic run that we had all the way since after Trump's tariff shenanigans mid of April last year. We had a massive run, and then we have been sideways. Let's try and make some sense of it. All right, I'm going to remove some of these drawings and just look at things on the larger context, and then as usual we'll go on to the smaller time frames. First things first, we have already discussed how this year's pattern is not exactly like that of last year. This is the first consolidation after a new breakout, unlike last year when we had already run the full uptrend. We have also discussed already how semis are leading this time. We have broad participation in the markets. And yes, there is obviously going to be a wall of worries for a consolidation to happen. But so far, the bears have not been able to materialize it. Now, we all know there are two kinds of corrections in the markets. One is correction through price, when price pulls back, and then another one is correction through time, when we simply go sideways, chop both sides out, and then continue on. All right. So far, this is starting to look like a correction through time. Only time will tell, but so far we have been range bound, and this could just as easily materialize to the upside compared to the downside. Now, in the last weekly watch list, I had discussed how everybody was bearish. Obviously, indices were towards the lower end of their range. And being bearish is one thing, but support levels have to break for that bearishness to materialize. So this is why 594 was that crucial level early this week, which the sellers had to break for us to go lower. They haven't been able to do that. Now, on Friday, a few important things happened. One of them was obviously we had the monthly Opex, and a lot of dealer delta is down in the dumps. So we can start to see some more volatility in the markets where the dealer dealer gamma is usually provides stability to the markets. And after Opex, after monthly Opex, and a lot of big options positions expire, we can start to see big players trying to reposition themselves, and we start to see increase in volatility. Now, you don't have to go into the internal dynamics of it. Just know that Opex periods or monthly Opex periods can often be a turning point in the markets, especially if we are trending into them. Now, in QQQ and SPY, there wasn't much of a trend, but obviously we have seen a lot of sectors, major being a software, that had a major trend into this Opex. And we have also seen a lot of deleveraging in the markets over the last few weeks. So could this be a turning point? We don't know yet. It's to be seen, but it definitely has the potential to. So another thing that happened on Friday is we had three bad news, technically bad news for the markets. We had the GDP come out lower than expected, the PCE inflation come out higher than expected, and the Supreme Court removed Trump tariffs. Each one of these has the potential to increase selling, and yet the market kind of brushed off the bad news. That's a character change. And something to be noticed, obviously the buyers will have to build on that next week. All right, this character change by itself doesn't mean much on an Opex day, but something to keep in mind. So that was the context, and we'll have more context in the video, but let's discuss levels real quick. Now, QQQ, they're showing, the trading view is showing that we went below the lows of the week of Feb 2nd. We actually did not. That's an error on TradingView data. If you guys go and check, on Monday, we tested that 594 area, did not go below the lows of February 5th. So we did hold that low. We did hold that support area. All right. So those are the main things. Now, next week, we have NVIDIA earnings. And given how much consolidation we have been in, NVIDIA itself has been in a tight squeeze coming into these earnings, massive range, also the first major consolidation since the breakout in June. And given the weight that NVIDIA has on the indices, it's going to be a turning point. So Wednesday, we have to keep our eyes on it, especially after close. Also, Trump is speaking on Wednesday morning. And then we have PPI reports on Friday. But the main thing for this week is definitely going to be the NVIDIA action. All right. Few other things to notice in terms of context before we go into the specific levels is SPY actually closed this week above the 9-week moving average. And so did IWB, which is the Russell 1000 ETF, which talks about the mid caps. I'm not sure if IWM has already been above the 9-week moving average since the late November. So that shows broad market participation. Obviously, we have tech or software having been delevered over the last a month or so. But overall, the broad market seems pretty strong as things stand. All right. So, quick summary of the context. We are entering a phase where volatility will start to increase. We have broad market participation. We are still in the first consolidation after the breakout last year. And usually first consolidations resolve to the upside. Price movement so far could be a correction through time, right? Time will tell, but so far the bearishness has not materialized. So those are the 4 main points. And then NVIDIA is obviously the catalyst going into next week. So after that, let's look at QQQ levels real quick. 594 area is still going to be crucial next week. All right. This is the area, this level of support where we have been above it all the way since back in November. What about after that? After that, we have these monthly lows of November, which are important. Below this, we start to see sellers gain some control. We could see some selling all the way down to around 540 area, which is the 21 MA on the monthly chart. So those are the levels for next week. We have 594 and then the lows around 580, which are crucial for supports next week, where the bulls do need to show up. Otherwise, we start to see some heavy selling. What about on the upside? On the upside, this area of 616 to 618 is obviously major. This was the level that had held price for a long time before we saw the selling of last 2 weeks, and a recapture of that level is going to be major for the bulls. So around 616 to 618 area. And you guys can see that was the level where we held above it for a long period of time back in December, back in January, even early Feb. And this is the area under which we have consolidated for the last 2 weeks. So on the daily charts, this range is going to be crucial for the next direction. Above this level, above 618, we start to see a move back to all-time highs. And yeah, the only thing that concerns me a little, I would personally want QQQ to get to all-time highs or above, right around SPY. Usually tech, because it's a risk on market, leads. Could this be a bit different this time? Yes, because of the weakness that we have seen in software. But personally, I would like for QQQ to get at least to the top of the range while SPY is breaking out, if not breaking out before SPY.